Hello everyone, and welcome back to another training video. In today's video, we're going to be discussing support and resistance. So in the previous video, in the last video, we talked about market structure and how price moves, what are the different trends in the markets. And now, we mentioned that in those different trends, we need to be looking for different types of opportunity to give ourselves or put ourselves in a situation where we have the biggest or the highest probability of being right? Now, support and resistance is one way of confirming, especially the way I've explained it. I know a lot of people teach support and resistance in several ways, but based on the way I'll teach it in relationship to market structure. Now, a lot of people think support and resistance don't work, and in truth, the way people use it, it doesn't work. But when you apply it in such a way with the understanding of market structure, then you'll be able to find support and resistance that will hold and how to use them. So let's jump straight into it and look at what exactly is support and resistance. We'll see how we can plot support and resistance levels, and then we'll see some useful tips from me. Okay, so support and resistance. Now, this is one of the most widely used concepts in trading, right? Now, strangely enough, everyone seems to have their own idea as to how you should measure or how you should draw your support and resistance level. Now, we'll look at the basics because this is always a good place for people to start in terms of understanding analysis. Now, support and resistance is the ABC of technical analysis. At least what you learn is the simplest, basically kind of like the simplest foundation to start with. Right? Now, the whole idea is this. Remember our market structure exam, our market structure training, where we understand that price move in a certain way, and in the bullish market, you can see price make higher highs and higher lows. Now, when you think of support and resistance, I want you to think of floor and ceiling. Now, wherever you are now, you're standing on the surface. It's a floor, and that floor is holding you up. Now, even if you're lying down or you're sitting down, the chair or the bed is actually is resting on the floor. That is supporting you up, because if not for that, we just fall into oblivion. So support, the floor is supporting your feet and making you stand up. Now, most likely, if you're indoors, there's a roof above your head, right? Now, sometimes the roof is higher, sometimes the roof is lower. But if you throw a ball, right? You throw a ball and the ball you throw it very high up in your room or wherever you are, chances are when it gets to the ceiling will prevent it from going further upward, and then it will fall back down. So this is the whole concept of floor and ceiling, support and resistance. So support is basically levels in price charts that prevent price from going lower, and resistance are levels in price charts that prevent price, or at least tries to prevent price from going higher. Now, what I don't want you to think is that don't think that support and resistance always hold. They don't always hold. Support gets broken, resistance get broken. And they can present opportunities for us if we know where to look, okay? Now, support and resistance are used by traders to refer to price levels on the charts that prevent price of an asset from getting pushed in a certain direction. Now, here is, a simple illustration. You can see in this particular illustrative chart here that you'd see or you'd notice that down here, these blue lines are showing support and the red ones are showing resistance. You could see that price failed to get below here. It failed to get below here. Again, it failed to get below here. So imagine you had a ball, right? And then you bounce the ball on the floor. Now, but instead of thinking of floors and ceiling as concrete objects that a ball could not break through, think of it as maybe a plywood that sometimes could get broken, right? Now, the ball bounces, it comes down, it finds support, it can't break it, right? It goes up, it finds resistance. This level, some sort of a level, prevents it from going up further, and then it comes back down, right? It finds support, it finds resistance, it finds support. So you can see that this area is serving as support because it's preventing price from going lower. However, nothing lasts forever. Eventually, the resistance level gets broken. So this level that was previous resistance could potentially become support because now it's broken, price, the ball could bounce and then goes up, maybe find another resistance, come back down. This previous resistant area could become support. Now, this is one thing that you'd see occur frequently a previous area, a previous zone that was preventing price from going higher, when price eventually goes above it, but now most likely serve as support, preventing price from going lower. So support usually turns resistant, and resistance usually turns support, right? So this is, a rough understanding of what support and resistance is. Now, successful technical analysis in most cases depends on identifying formations in the markets where we can identify floors and ceilings, and then we can give ourselves or get our probability higher of spotting price patterns that could give us favorable trades. Now, success in trading involves buying low and selling high using minimal risk and higher potential reward. So in a bearish market, like I mentioned now, this is where, a lot of people get it wrong because they just draw lines on their chart and expect those lines to hold every single time. But the way I would say is this: well, price move in a structure, in some sort of wave. Therefore, if the market is bearish, that means if the market is bearish, you'd expect that the support would not hold, at least because the trend is bearish, because price would want to break supports because that's where the trend is. Therefore, in a bearish market, our main interests are resistance areas. If the market is bearish, we're looking for potential resistance areas to look for selling opportunities. And then when the market eventually turns bullish, we start looking for, because if the market is bullish, therefore what it means is resistance will no longer be holding because the market is most likely going to be breaking above them. So we start looking for potential support areas to serve as possible buy levels to get involved in the trade. So support and resistance are previous areas where price has reacted. But just because price has reacted in a level before doesn't mean it will react the same way now. Understanding the structure of the market in relationship to what price is currently doing would help you filter out bad trades and then hopefully put you in a position to stack the probability in your favor and find good trades. Now, how do we draw support and resistance level? Now, personally, I don't really draw a lot of support and resistance levels like I used to do in the past, but it's actually quite useful, quite helpful for newbie traders to actually see how price reacts to certain areas in the past. Now, one thing to understand is that these levels, when you draw support and resistance lines on your chart, support and resistance are not actually exact numbers or exact levels. Think of it as a zone. It's just like if we're expecting a particular season, let's say we're expecting the Harmattan to come around November, December. It could come late November or early December. But we know that within this period, we can maybe expect it to come, right? So it's not, Harmattan comes 1st of December. No, that's not how it works, right? Within a certain period, within that zone, we can expect this to happen. So think of support and resistance not as exact numbers, but as zones. Because oftentimes you will see that a support or resistance level might appear to be broken, but soon afterwards, the market actually respects it, right? So you'll see that. So for example, look at this, where, just simply looking at this area, you can see price came here, we tested it, right? And pushed back up. But notice how the wicks of the candles, right? The candle wicks came below this support line that was drawn. Does that mean it doesn't hold? Well, no, because it's not an exact line. It's more of a zone. It's an area. And then again, you can see, so remember, just like, when drawing support and resistance level, you just need an area or a level where price has rejected at least twice in the most recent past, right? So a level where price has rejected at least twice in the most recent past. So you can see we had a first rejection, a second rejection. What does this mean? Well, it means if price comes back down here again, we could potentially start looking for opportunity for it to hold, right? Don't worry, when it comes to some tidbits, I'll show you, I'll let you know on some tidbits or useful tips, okay? Now, just like I mentioned, when it comes to support and resistance, you don't want to think of them as exact levels, but instead as a zone, because sometimes people will say, if the wick of the candle closes above or below it, it is not broken, but if the body closes below it, it's broken. Sometimes you see that, sometimes you wouldn't see that. It's all dependent, just like I mentioned when it comes to market structure or fundamental technical analysis. it is all subjective, right? Now, look at this example. That's the same chart. You can see that price held here, and at this point, it appeared price had broken below it. But, well, it's not the case because you can see price resultantly pushed back up. Now, your goal as a trader, let me just put this into your head if it has to be said, is not to make profits in every single trade you take. It's about defining a set of rules as to how you trade and then following those rules. You would have obviously back tested it and said, okay, this works more often than not. And then back testing it. So if you, let's say, had a system where if you let's say you place your stop loss just below here and you get taken out here, it's fine. Doesn't mean you now throw away that concept. It just means that, well, it happens. You're not going to be right 100% of the time. But when it comes to support and resistance in terms of drawing them, what I figured out is in most cases, it's probably helpful to draw them using the line charts because the line chart will filter out, some of the weeks of the candle and help you draw a better level. Not always going to be accurate, but you get the idea. It gets you thinking about zones, where markets, or how price would react. Okay. Now, to help you filter out this false breakout, you want to think of, like I mentioned, support and resistance as zones rather than concrete numbers. Now, one way to find these zones, like I mentioned, is by using the line chart. Because, okay, so for example, look at this. Okay, there's no, a candlestick chart will show the weeks higher and lows, and sometimes those weeks could extend up and beyond, and then make it a little bit messy. But when you put the line chart, you'd see a very symmetrical setup that would help you to at least filter out some of those noises in the market, right? Knee-jerk reaction, like you would see. Now, what are some useful tips when it comes to support and resistance? I'll just give you a number of them. Now, when the price passes through resistance, that resistance could potentially become support. Now, it's also vice versa. When the price breaks a level, so when price is, there's a level that has been keeping price from going up, and eventually price breaks that level, well, there's a good chance price would continue up. And then there's also a good chance that price would, that previous level that was serving as resistance will now become potential support, right? And also vice versa, when the level that was previous support is broken, it could potentially become resistant. Now, the more often a level is tested, either as support or resistance, the stronger that area of support or resistance is. So if price has rejected a certain area once, twice, 3, 4, 5 times, well, that area is significant. Now, significant in what sense? Does it mean it would always hold? No. It means is if we find confirmation that if that area holds, it's going to be a bigger rejection, or if it breaks, it's also going to be a bigger break and a bigger follow-up. So those levels, the more touches or the more an area has been tested, the stronger that level is, the market is going to react around that level. Now, when the support or resistance level breaks, the strength of the follow-through depends on how strongly the support and resistance has been holding, which is just what I just said here. And then the application of support and resistance to market structure is essential, like I've mentioned and I keep mentioning, is just putting support and resistance together. It's not exactly what I see many people do most of the time is, well, they'll just see the market and then they'll draw lines on their charts. Okay, this is resistance, this is support, and then just try to, what would I call it? Try to sell every resistance and try to buy every support. Well, that sort of trading would just, basically doesn't work in my own experience. What I figured out is, well, if you look at the market structure, so what I mean is if price is bullish, right? The price is making higher highs, higher lows, higher highs, higher lows, higher highs, right? Like we mentioned, the momentum is for price to continue going upwards. So what we want to be looking for is opportunity. We want to be looking for areas of support to see price continue to go up. That means if price comes back to, let's say, previous level of resistance that was now broken, or even comes down deeper to test previous low price, we could start looking for potential opportunities to buy. Why? Well, because price is already showing that it wants to go up. Right? Now, we could be wrong, yes, but most times you'll find that if you trade in the direction of the trend and you apply support and resistance in this way, you'd have more joy in your trading. And then obviously nothing holds forever. So sometimes the market begins to change trend. And when the trend changes and price becomes bearish, well, you don't want to start looking for buying opportunity or start looking at, oh, draw a line like this and saying, oh, that level will hold. Because most likely what will happen is the level would break, right? So in the bearish market, we want to look for selling opportunity. And in a bullish market, we want to look for buying opportunity. So we're going to look at some examples. We're going to look at some examples on our chart to illustrate this. Okay, so we're going to look at the price chart for this is GBP USD, right? So this is the price chart for GBP USD, and we're just going to see, try and apply what we just learned in support and resistance. So remember, like we mentioned in market structure, that price is always moving in different trends. So you can see clearly here in this instance here, you can see prices bullish, making higher highs, and then the market is bearish. So you notice that price always moves from one trend to the other. That's how market works. Now, remember, like I mentioned, when it comes to support and resistance, some people would say just draw levels on your chart. So on your, whether you're on your MT4, you'll be able to see the horizontal line tools and the trend line tool, right? Just up above there. Watch the video on how to use the MT4 if you have a problem with that. Now, normally people will just look for key areas like this and just start drawing lines up and down and watching for price to react to those areas. And that's one way of doing it. And if I used to trade like this before, you could find it work in several instances. Well, here's why I figured this. We want to look at immediate support and resistance based on the structure of the market. Okay, so here's what we do. Right, so we ask ourselves, okay, what I'm just going to do is I'm just going to take a time frame. Let's just say we start from this high. So in this period here, the market was bullish. And then when price broke below this area here, the market actually became bearish, right? So let's use this period. So this high, right? This high right here is when price began to change structure. So price broke down here. So this will be the break of structure where price went from a bullish market to a bearish market. And then what we do is once we understand the trend, okay, so price broke down. So this would be where price made a high. So this would be high, right? So just call it H. And then to a low, and then a higher high, and let's see, a lower low. So let me just rename this to a low, and then rename this to lower high. I said lower high. Yeah, that's lower high and lower low, right? Now, so you could see at this point, we can start to see that the trend has changed. Let me just maybe play the replay to like this. When price broke down like this, and the market made broke down from this area, broke down and made a low that was lower than the previous low, and then made a high that's also lower than the previous high, start to tell us that, okay, price is actually looking to be ready to change trend. Now, in some cases, it could continue going higher. But once we see this, we can actually start looking for sell opportunities, right? Because, well, in the bearish markets, we see lower lows and lower highs. And then what we want to do in the bearish market is look for sell opportunities. Now, if we're using support and resistance, in this case, we'll ask ourselves, what are the previous areas? Remember, in the bearish market, we're looking for resistance to sell from. So we can now start to say, okay, well, you can see how this area here, price reacted to it and then broke below it. So price could very well look for a reason to continue going down, because in this bearish market, price wants to keep going down. So because price is bearish, this area here could be a good area for us to look for sell opportunity. Also, you could see how this area here, you could see, so what I mean is, see this, so let me draw a line instead. So you can see how, well, price rejected here as support, came back, rejected here as resistance. And then also we have all the way up here, right? So let me just copy this and paste. And there's also another level here, right? And even the highs. So this is also another area, because remember, as long as price stays below this high, there's a good chance it will continue going lower and take out the previous low. Okay, so we have this, we see price break down like this, we draw our levels. Remember now, we're only focusing on areas to sell. Why? Because the structure of the market is bearish, right? We are only focusing on these areas because the structure of the market is bearish. And then here's the thing. Now, I'm not going to talk much about confirmation. This is where we, in some subsequent videos, we'll be talking about, price action, candle setups, other blocks, all of those things. Those are how you confirm. But this gives you an idea of, okay, possible areas, because we don't know for a certain if price will continue to go down, if it will retrace, and if it will retrace, how deep it will retrace, and if it will continue to go down as well. So we plan our trades. Success in trading is, many times people, see me and ask me about, how does trading involve? You're just sitting down in front of the chart trading every single thing. Actually, trading is mostly patient. You plan a trade and then you wait for the market to come to you, and then wait for price to confirm, and then you trade. So in this case, let's play price and see what happens next. So now price begins to move. Now price, okay, in this case, right? Now, I'm not going to talk about the confirmation here, because this is just about support and resistance. Sometimes they hold, sometimes they don't. Let me make this one. Okay, so price begins to move, and let's see what happens. So notice how price reacted around here. It tried to, there were some sellers who tried to continue or defend this area, but, well, it didn't hold. But remember, the overall structure is this high, right? As long as price stays below this high, there's a good chance price would come down and take out this low, okay? So price continues to move. And then now, because this particular video is just about support and resistance, I'm not going to complicate it by adding confirmations and all. But basically, what you'd see is price would respect these areas. And remember, we said it's a zone, it's not an exact number. So we can basically take this region, right? We can basically take this region as a region of an area of what I call it, of a key level, in this case resistance. So if I change this chart now to a line chart, you could see that it's this, you could see where the multiple touches are here. And I'm going to change it back to a candlestick chart, because obviously it's more beautiful, more sexy. But even just this trade from here to here is enough. If I measure this would be what? Over 179 pips, right? And we look to trade. This is how we look to apply support and resistance. Then let's see what happens. Well, you can see price fell off. Why are we looking to sell? Well, because the structure has already told us that the market is bearish. And then if the market is bearish, most likely it's going to want to come down and take out lows, right? So if we start selling from here, our final target should be just around this low, okay? And then we keep doing the same thing. Now we ask ourselves, okay, has price broken the low? If price has broken the low here like this, now many people would look at this area and call it support and try to buy from it. But because we are applying support and resistance, the concept of market structure in mind, we wouldn't be looking to buy this area. We'll be looking for resistance just above us to sell, because the market is bearish. So even though we broke structure here, right, we start to ask ourselves, where could price get to before it starts selling up? And then maybe here, it could be there. It could be, there like so. Something like this. And then this will be our new lower high, and this would be our new lower low. And we look to repeat the same process. Now, this place could hold and maybe it could fall and give us probably turn out that there's a much lower low. But we prepare ourselves and then we look to trade, right? So let's see what happens. Price, as a matter of fact, doesn't hold that area. So what that means is, well, we'll wait for price to give us a new lower low, right? And then what are the key areas where price could reverse from? So let's see, is it beginning to let me make this fast. Okay, so that's going to be our new low. Let's see. Okay, so this is potentially our new low. And then we have to ask ourselves, where could price find resistance to continue to go back down in the overall trend? What's the trend? Bearish. Areas like this, still all of these areas, and we just wait. We look for confirmation within those areas, and then we try to do the same thing over and over again. So note what we are doing is we have a plan in mind. We allow the market get to us, and then we look for confirmation. We don't just sell and buy from support and resistance. We look for confirmation within those areas. Don't worry, you learn about confirmation in some subsequent videos. You learn about that for me as well. Now you can see price got here and then began to reject. In this particular instance, I can even see the confirmation that would have probably get me involved or in trying to look for a sell, because the overall structure is bearish. And what do? Well, we continue, and you see, well, this already is a good trade, and well, you see the market falls up. Now, if this area holds, now there's no guarantee, but if it holds, as long as price does not go above this high, right, this high here, there is a very big chance price is going to come down and take out this low down here. So let me make this faster. And okay, so you see, even though price is dancing around, and here's one thing to also point out to you: don't get confused by the intermediate structure. So for example, somebody might look at this and say, oh, the market is now bullish. But if you look at the overall structure, this is why, even though you're trading a smaller time frame, understand the higher time frame perspective. The overall structure, this is the high, this is the low, this is the next lower high, this is the next low, lower low, like that. So high, low, lower high, lower low, lower high, lower low, lower high. Unless markets breaks below here, anything here is still just noise. Is it that price breaks below here and make a lower low, or breaks above here and make a higher high? In which case, we start to look for buying opportunity, okay? So here, in this case, market broke below, make a lower low. What do? Well, this now becomes our new low. We start looking for resistance area to buy. Where could price reject from here? Here, all of these zones, something like this, right? And this would be our protected high, right? So this would be our new lower high, right? So lower low, lower high. So we're just moving with the price, and we'll keep doing this. Even within here, we might get some bad trades because price confirms and fakes out, but that's how we apply support and resistance. Now, this example is just showing you in the case of resistance holding, because we're looking for selling opportunity, but you flip that and you do the reverse for a buying opportunity, where we're looking for sells, for buys, and looking for support to hold on the markets. Okay, so this is the much we take. I'm sure you learned. I hope you learned a number of things from it. Don't worry, as you push further, it will begin to make more and more sense to you. And so this is where we'll come to the end of this particular training video. And I hope you enjoyed it. I'll see you in the next one. Until then, stay safe and have a wonderful time.